I'm just talking to myself. It's fine. There we go. All right, the reminder is out. Look at that. 1 minute early. Right, 1 minute early. That's great. Look at that. 1 minute early. Let me get rid of the echo before it destroys my brain to the point where I cannot think. Okay, so Friday, November 8th, 2 o'clock p.m. Eastern Standard Time. The skies are blue, the birds are chirping, but it's freezing today. It's cold. Not a big fan of the cold, and it's colder than I would like it to be. Okay, but the coffee's fresh. The charts are clean. The action is good. A decision has been made. And here we are, right? We're all just hanging out. Jan B, look at you. Changed, you added the whole name there. Hey, folks, Mark Hicks, happy Friday. Joe Lopez, too early for G&T. So it's G and Coffee. Nice. Good morning over here. Chris X, hello. Robbie, what's up? You know, you guys are a much chattier bunch across the pond. I'll tell you that much. Although Joe, a little repeat there. I look at this guy swapping time frames. Mark, seeing you at night. And Tom, look at this. That's good. Very good. Good to see familiar faces. Okay. Robbie says, yo. Brendan W., I have an order. Brendan's like straight to business. No hello, no hi, happy Friday. Just, I got an order at 8625 level for a spot long. Does this seem like a good spot? That's it. That's it. Not even a hey. Not even a hey. That's fine. Brandon, you bought 8625. Let's find it on the chart here. 8625. So Stamp didn't even get that low. Who'd you buy it on? Mex? 86. Yeah. Lowest we got was 8661 on Stamp. Oh, yeah, now he says hi. Oh, you just have orders in. Oh, okay. Oh, I see it. I have an order at 8625. Is it a good spot? It's hard to say at the moment. Got to be honest with you. We broke the 200, but the candle has yet to close, right? We talk about this all the time. Want the daily candle to close. And I know that's why I put in the update this morning. I know a lot of people don't like waiting for the daily, so, at least play like a 4-hour chart. But here's the deal, right? We're coming up to support. All right, we've been talking about this swing fail forever now is what it feels like. Coming down to it would be ideal. However, there is support in the way, right? We stopped for a little while at the 236. We hung out there for about an hour or so. Currently sitting on structure at 8802, right? We've had that level for far too long, right? That's based off of these highs over here and then this whole enchilada of highs on the way up, right? This whole zone right here. 8802 is a weekly structure level. All right, that's why it's in the update. From there, you have the 200 EMA, daily EMA, that's the DEMA, right? And that held it up for a little while. We got good reaction of buying off of that and didn't quite hit the 50 DMA, which is sitting over at 8625, which is your buy zone right now, 8625. So the thing about it is, like, if your thesis is to buy the swing fail as support, like this whole thing is your retest. So here's the breakout. So here's your swing fail. Starting at 14 down to 7. Here's the swing fail. Here's the first test, right? We lost 2,500. Here's the second break and close. We lost 2,500. We ranged. Came down for a second side low, which then validated this new trend, which then gave us a falling wedge, which then gave us a breakout. So if you're playing the breakout or the swing fail, then 8625 is a front run order to the actual level, which is down here, right? And that would have to happen on this daily, otherwise the price would obviously go down. So 85.61, 85.55, 85.23, and then you got the pullback level right here, 85.01. So really from 8,500, which means that this would take like another day to realize, right? Or you're going to have some overrun, meaning like you're going to pierce through and not find support exactly on. You'll end up piercing through it if you are going to cover the distance, right, between I want like a real number here, but we're just going to have to call that 85.60 would be the swing fail. And then 85.01, we'll call it 8,500 to make life super easy. So it'd be a $60 difference in that little nook right there. That would be an overrun if it hits today and not tomorrow. Obviously, the next day, the overrun would be even smaller. And then on the third day, so really on Sunday, it would be perfect. You see that? Sunday would get the pullback 50 at 85.01, would get the swing fail at the same time, and at least on the daily chart, nothing else seems to line up. There could be something on a 4-hour, like a moving average, that might be floating around that zone. I don't see much there. I don't see much on the hourly. No, not much. Those are your only two confluent zones. We had a great zone earlier over here, but it didn't break south, so we couldn't take it. But that would have been structure. We had structure. We had the 50 was right here. We had the 236. I mean, it was perfect, but it just didn't happen. So, hey, you roll with the punches. And you allow price to do its thing. But where we've been stuck for the last, 11, 12, 13 days has been the clamp after the breakout, right? And this was the breakout play right here. And then we clamped ourselves underneath the 100 and above the 200 with no decisions being made really in between. We had a very small range, but we talked about it we talked about it every night, but this resistance zone, right, is the one to beat. So even with the 100 being the overhead ceiling, we haven't closed above the 382, right? And the 382 is sitting at 94.41. That's the top side of this red zone right here, right? And that's the all-time high, 382. So, basically 20K to, 3, right? And if you consider this whole thing being a rally back from 3, then that is where you'll find your 382. All right, so we've been playing that level for quite a while, but it has been resistance this whole time. It still is today, although we haven't attempted to get close to it. But remember, the day is young, all right? You never, ever, ever want to count your chickens or count your, you know what I'm talking about. You don't want to do that with this because you get stuff like this, right? Bang, you get this massive wick down and then a recovery and a push to the upside, right? We get Darth Mauls mostly on the 4-hour chart, not so much on the daily, but like this monster wick up here, there were people buying up here, right? You don't do that. Well, we don't advocate you do that because it's a bad idea, right? You want this thing to settle, right? And we said it when it happened. We're like, chances of breaking this level, right? That was support, clean break, right? After 4 attempts. Okay, that's what people forget here. 4 attempts, and then you finally broke it. Right over here, when we were trading up here, and we hit 98, and then 99, and then 10, I'm like, a lot of us were talking. We're like, it'll probably come back down under here, because of the very simple reason that chances are you're not going to break it on the first attempt. Maybe attempt number 2, maybe attempt number 3. right? But to break it on the first attempt is unusual. Can it happen? Absolutely. Does it normally happen? No. And when you trade based off of probabilities, you like to take the road that's more probable. And it's more probable that it wouldn't close anywhere near these levels. And it didn't, right? It came down and then established this new range using that level as major resistance, right? No candle was able to close over here except for the fake out candle, which was your confirmation candle off of the breakout play. So now that we sit here, this all goes back to you, Brendan. This all goes back to your order. Anyway, 86.25 again is a good zone. It's just not confirmed yet that this may have further downside. If it has further downside, outside of the targets at the swing fail, if the swing fail doesn't hold, this is your next target. You know, you're back to 7K, right? There's virtually nothing in between. Okay, so price right now on the daily chart is hanging on by the 200 EMA and the 50 DMA. That's it. Everything else is used. Everything else is resistance. The 100, the 200, the 100 EMA, the 21 EMA, it's all used. Now we could go to the weekly and you'll see the clamp up top here with the 20 and the 100. Right, so you get there's tons of room, right, for this thing to move. So your next major level would be 76.66 or 76.82, and that's where the 100 weekly moving average is sitting, along with this little support zone over here. But it's a little tiny support zone. It's not fantastic. It's an area where we might find a little bit of support, but I wouldn't like place bets on it, right? Yeah, your next big one would be that 100 MA, and after that, you're down at the bottom of the pattern. All right, this structure will only take you so far, and if we look at that structure right now, this is like almost, you call that a hit, right? That's a win. Okay, so if you're playing support resistance, that's a winner right there. That's a flip. Okay, this is what was once resistance, comes down, breaks it, come back, retest it. The only issue with this, right, is that the swing fail or the pattern or whatever you want to call it holds more weight. And by holding more weight, I mean any pattern that takes longer to develop, to realize, puts more confidence in that pattern because it's not a simple fly-by-night pattern. It's not a pattern that created itself inside of a week or two. This is a pattern that has been developing over the course of months, right? And when you have that kind of historical backup to it, when you have that kind of historical weight to it, it puts more significance on it. It's like, do you want to trade a trend line that's unconfirmed with only 2 touches? Or do you want to trade a trend line that's validated with 3 touches, 1 confirmation touch? You will always want to trade the one with the confirmation touch because the other one is just a theory. It's just a thought. It's just 2 lines. Or it's 1 line, it's just 2 anchors. Like this right here was just a thought. This was just take the major low and take the major low from the dip, right? And put them together. And then maybe something will happen down the road. And it did. And when it did, and when it reversed price, in other words, it tapped it and then you saw a reversal in price, even on a local chart, all of a sudden there was buying. Well, then it's validated. And then at that point, since it's validated, it's confirmed. And it's confirmed, it's a legit trend line. Before that, it's just a line. Right? Lines are just lines. Right? Until they have that third touch. I think we did like a whole thing on when trends are confirmed and so to break that entire lesson down to like 1 sentence It's the third touch. That's what confirms it. So in other words, am I going to take this, like, what do we call it, like a 1 month? Or, well, we'll do the whole segment, to be fair. So are we going to take a 45-day SR flip over, which is good. Don't get me wrong. It's amazing. But are we going to take that over a 135-day developing pattern, including a swing fail with 2 fails, right? And a confirmed pattern showing us a falling wedge? I'm going to take the pattern. All right? Now, this is crypto. And people like to front run every order I put on the books. It's just how it works. So, would this be considered a front run? Let's take a closer look. A front run to me is 1% to 2%. Now, it's Bitcoin, so it's a little bit different, right? Like 1% of Bitcoin is kind of a big deal. You know what I mean? It's not like 1% of Doge, you know, or XTZ or Argo or Algo or whatever. So we're at 1.3%, which equals $110. So are we going to consider that a front run? I don't think so. $107. I'm going to say no. I'm going to say if anything was front run here, it was the 50, right? So, you know, the 50 is sitting right here. 50's sitting like right here. $38. That's a reasonable front run. 20 to 50 bucks when you're trading at 10K. That's reasonable, right? That's fine. But do I think we front ran the flip? No. Now, on the weekly chart, you probably just forgive it, right? Because the weekly chart, you're looking at it like this. You're like, yeah, dude, retest, close enough, bang. Easy. All right, here's the drop, right? Here's your wedge. Here's the breakout play. 2 weeks to come down, retest, push up, bang, bang. You're all good. But when you're on the daily, you zoom in a little bit, you didn't get that touch. And when you're talking about buy orders, you know, being developed off of like fractions of a dollar at some point, right, for algos, then, you know, you'd like to actually get the touch. And we didn't get the touch. And there's no telling that this is over or not. It's a good buyback for now, but don't be fooled by that. Hell no. Look at this. Huge dump. Awesome buyback. What happened? An entire day went by. Price moved $100, but shifted probably 200 up, 200 down, eventually just sideways. And then on the third day, it dumped an additional $377. So for anybody who thinks that this move is over, right, has not been paying attention to current price action. And that's one more thing I want to mention before we move on. When we talk about this SR flip, when we talk about this zone right here, that guy sneaking in, right, and giving us the resistance, breakout, comeback, flip support, that's local. Local would be the one thing that could take precedence over an extremely large pattern. All right? Because local is what's up. Local is what's shaking now. You know what I mean? It's the difference between getting the news as the news happens because you're at the event to getting the news a few days later when you're home from the event and all the dust is settled. You're there. You see it. You know what's cooking. Where back here, things were different. All right, now this, to me, is not long enough to fall under the historics are too old. I'm talking like a pattern that'll develop over the course of like a year or two. And that's something you'll see on like Apple or GM or Amazon or Microsoft. You'll see those on gold and silver. Some of those patterns will take forever to develop. And by the time they finally do, it's like, now, not much has really happened, right? Because there was, 10 dozen patterns inside of just developing that one pattern that pattern's like, you're forgotten about, right? So anyway, that's probably enough on that. All right, let's take a look what's going on here. Tom, let's see. What's good, SP? Mark Beavers, Tennessee is freezing. Mark, I used to live in Tennessee. Yeah. Well, I'm in North Carolina now, and it was cold this morning, and it's going to be cold tomorrow and cold tomorrow night, and I'm not cool with it. Joe Lopez, I'm in Cali. I used to live in Cali. Man, you guys are all crazy. Yeah, Cali. Dude, Cali weather. It's so good. Okay, let's see. Jan B, this is my other profile with the true name and everything. Crazy. Brendan says, sorry for not saying hi. It's fine. Brendan not messing around. Joe Lopez. Yeah, that guy. I know. Johannesburg plus, this guy's doing Celsius. Dude, can you convert it to Fahrenheit? I think it's, what is it? You divide by 8 and add 5. You divide by 5 and add 8 over the base of 32. I don't know. See, I already don't want to do the math. That sounds, is it plus 35 Celsius, minus 30? It looks like plus minus. I don't know. Whatever it is, it sounds awful. But if you're warm, then that's cool. Brendan says, hi. You just have orders in. All right, very good. You and his son, Brian. Adam says, hey, man, Chris. Chris. Yeah, we don't delete messages here. Nope. We do drink coffee, and the coffee's delicious. Joe, do you want to tell Chris? We don't delete messages. We don't delete messages here. Jason. Adam says, what do you mean front run? Front run is okay. So here a front run is simply like cheating the orders, right? You're sneaking in. You're stealing a defined order so that you can make sure you get hit, right? So a front run is simply this, all right? I put buy order right here. And I'm like, I am going to buy at the swing fail line at whatever that is. We'll call it 85.60. That's going to be my buy zone. And then everybody else is like, yeah. 85.55. Yeah, I'm in. 85.60. I'm going to buy there too. And then all the other guys, when they get on the exchange, they're like, well, there's not going to be enough orders at 85.60. Like I'm not gonna get my order hit. So I'm gonna put my order at 85.65. You know what I mean? I'm gonna front run at $5. Or I'm gonna put my order at 85.70, make sure I definitely get hit. Screw those guys. And what happens is that if enough people front run, the price never reaches the actual target. And that's why sometimes we'll see stuff like this. Now this isn't a perfect example because this move isn't over yet. But when you see something like this and there's just a tiny little gap and you're like, that doesn't make any sense. Price should have just came down to it. Yeah, because there was a ton of orders over here, but all of the traders that screwed this guy all bought early. And when they bought early, they destroyed the actual entry, right? And it happens all the time, and it happens like unforgivably in crypto. Unforgivably. I've missed more orders than I've placed by being front run. Which is annoying. It's really annoying because then you have to be the guy who front runs everybody else. And what does that mentality do? It destroys setups. A setup is a setup for a reason, right? It's a good looking setup. It's a perfect breakout. We come back, we buy the retest, we buy support, we sell resistance. Well, if support is no longer support and support is just a cushion of support or a range of support because we got people front running everything, well, now you got to account for that. And that's the same thing when you go to sell and take profits. If everybody's selling, right, at 10K, well, guess what? There's not going to be enough orders out there to fulfill everybody's 10K order. So to make sure you get the hell out, you're selling at $99.75 just to make sure your order gets hit. It's the same thing of having a buy and a sell wall. They force you, if you want to buy something, right? Let's say you want to buy Bitcoin. You want to buy Bitcoin right now. And right now, Bitcoin is trading at 88.06. And you go on the exchange and there is a freaking buy wall, right, of $25 million at 88.05. And you're like, well, I want to get a deal. I want to pay 8,800 even. Well, that means that the sell orders have to eat through $25 million worth of orders before it ever breaks down to 8801 or 8800 even. So the people that are like excited and they want to get in, they're like, screw it, it's just a couple bucks. They're going to front run the buy wall. And if the buy wall is sitting at 8805, well, they're buying at 8806. They're buying at 8807. They're buying at 8808. They don't care because they just want to get in. And they can't get in until that stupid wall gets moved or eaten up by all the sells. That's front running. You can front run a buy, you can front run a sell, you can front run anything. Anything that has a level, you cheat the level. Okay, does that help, Adam? Do I ever go to, you ever go to Harrah's Cherokee? I never heard of it. Harrah's. There was a casino in Vegas, Harrah's, or that might have been in Atlantic City. Northern Ontario, snow on the ground, 22 degrees. Mark, get out of there, quick. Robbie, 95 degrees? That's what 35 Celsius is? Johannesburg? I wish I was there. I'll tell you that much. Denver was 30 2 days ago, 70 tomorrow. See, that's not cool. I lived in Austin, and we had swings. It would be like 85 degrees one day, and it would roll down to like 30 the next night or that night. Or it was like those swings were so freaking dramatic, and they would last for weeks. You know, until like you finally like, okay, now we have good weather and it would stay, warm for a while or it would be cold for a while. But man, there were periods in between spring and fall where, you had like 40, 50, 60 degree swings. It was ridiculous. It's crazy. Crazy. Chris says, sorry. I was greeting a fellow countryman in the lingo, then decided it wasn't appropriate. We're all family here. It's fine. Awesome. Thanks, man. So it can mess up your risk reward. No. So Adam, your risk reward is going to be set off of your targets. Okay? So in other words, if I put my order in down here and it never gets hit, I'm not in the trade. Right? Everybody front ran me. So I'm screwed. I'm just not in the trade. I don't have the asset. I didn't buy it. It didn't come to my level. If you adjust your buy to be higher, then you have adjusted your RR for sure, which means that your stop loss, if it's going to remain in the same place, It means your position size is going to be smaller to account for the larger spread between where you bought and where you're willing to get stopped out. Okay, solution to front running is DCA. No, but yes. So, DEMCOS, here's the thing about DCA. Now, DCA typically would be like long-term investing, right? Dollar cost averaging into an asset over the course of, many weeks, months, years, whatever. I wouldn't call DCA on a trade. On a trade, I would just call average in. Average in, average out, or ladder in and ladder out. Now, the solution, if you're saying that that's a solution to front running, yes and no. The problem is when you split up your targets, your buy-ins, and all three don't get hit, now you need to adjust everything in your trade. Because your trade is designed, let's say you ladder in a three-way. Right, so let's just get an example here. All right, let's say this is the trade, and I'm going to say, all right, well, I got one buy here for sure. Right, I'll buy the 50, right, and then I'll do like a Hail Mary momentum buy, meaning that like it's so aggressive, it's coming down so hard, it's starting to pump, like it's doing that thing where retail forgot to start buying, so you get that lower level, right? The PB5, that's a 50 pullback. I'll buy that over there. Now what happens is you have to account for either all three getting hit and averaging the cost, only the first getting hit, and dealing with that with a different position size, dealing with the first two getting hit, once again, adjusting the position size, changing your RR for the stop loss, and changing your average to now be, somewhere around this ballpark, and then all three getting hit. So there's so many different ways that can go wrong. It's a great idea, and I practice it myself, but you have to be very on top of it. You have to really, truly understand that your position size, your risk reward will change depending on what of those three targets get hit if all three don't get hit. If all three get hit, it's super easy. You just take the average and you know that that's your buy-in. And then you can calculate your stop loss off of that, right? Before you buy it, which means you understand your risk and you understand your position size based off of your capital and if your stop loss gets hit. You can't do that if you don't have all the pieces of the puzzle. If you only have a few pieces to the puzzle, it becomes a variable. Once you have a variable, that means you have to be on it. You got to be on it so that you can adjust it on the fly, or you got to allow yourself for all three potentials, and then you're probably trading with very, 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 very little capital because you have to account for only the top one getting hit and your stop loss staying where it is, which would be the largest gap in buy to stop getting hit. You know what I mean? So if it goes from a DCA or a ladder in of a 1% away from entry to like a 4% away from entry because of your ladder in and only the top hit, that changes everything. I mean, everything. Right? That changes your position size, which means now you probably only got in with a third or a quarter or a half. Right? And then your stop to get hit all the way down to like 4% instead of 1% or 1.5, where it would have been on average. Okay? So, yeah, it just, you could do it. You just have to be on it. You have to know what you're doing. Okay. Whoa. Okay. Adam says, absolutely, Mark Beavers. I thought you said you lived. Yeah, North Carolina. I do. I mean, now I do, yeah. I lived before here. I was in Austin. Before Austin, I was in Jersey. Before Jersey, I was in Nashville. Before Nashville, I was back in Jersey. And before all of that, I was in California, San Diego, LA, City of Industry, and Florida, Bradenton, Sarasota. And everywhere I went, I drank coffee. And it's good. Okay, so Simon McConnell, 3 Celsius. How? Northern Ireland. I might be going to Ireland next year. Very excited. Daniel, hello. Daniel rolls in and says hello during prime time. Daniel, what's going on? Daniel likes to roll in like after we've already finished. You know, like we're closing the stream down. Like that's everybody saying goodbye. And he's like, yo, Matic BTC. Oh, man. I forget what it was last night, but it was funny. Let's see. Adams has got you. Ireland's so beautiful. Yeah, I've never been. I can't wait to go. Super excited. Raven BTC looks tired. Let's take a look. Raven BTC. Oh, yeah. So throw your... I forgot, since we're not on normal time, we're not really waiting for Bitcoin to do anything. Like specifically, no close or anything. So, if you got any charts you want me to throw up, just throw it in chat. Let's take care of all that. Not going to have any special lesson today. We'll just answer whatever questions you got. And we'll roll for, probably like another half hour or so. All right, I interpreted Brandon's comments as in if with no one front running, we could have made a larger profit, but since we needed to adjust for front run entries, profit is less. Yeah, but even worse. Not only is your profit less because your entry is higher than you would want it to be, your take profit is lower than where you want it to be because all of them bastards are going to front run the sells. Yeah, you get screwed both ways. I'm telling you, it is so frustrating. It really is. Yeah, it really is. But, we're not here to complain about the market. We're just going to talk about, what's going on here. It's all good. Okay. Raven BTC. What is shaking? Oh, I got to adjust everything on here. Okay. That's good enough. All right. Raven. What did you do? You broke out of your falling wedge to do not much. Well, clearly you didn't get anywhere near where you should have gotten. Ended up getting to the 2.6, just about the 2.6, but got stopped right here at the 200. So this is a really good front run example. Okay, look. Price is going up, right? So if you bought the wedge breakout, right, you would have bought this right here. That's the retest, bang, bang, boom, boom, you're in, okay? Price comes up, it makes a higher high from the initial breakout. So this is your victory. This is, okay, it's time to go, it's time to buy. So you buy it, you're in. You're in the trade, you're going up, you measured it out, and you're like, okay, well, I'm shooting for the 2.618, 1.6 on the short-term target, right? 1.6 hits right here, you're all good, price continues up, you're gravy. 2.6 is sitting at 473, but in front of 473 is the 200 EMA. I would take the 200 EMA over a 2.618 because the 200 EMA is right there. It's right in front of you, and everybody's looking at the 200 EMA. Not everybody's measuring out a 2.6 the way I do, right? So fine, no problem. Did it hit the 200? Did it hit the 200? Nope. No, it didn't. So the 200 at the time was sitting at 469. The high between the two candles, 465. 4 Satoshis. Now, I would do this, and I would say, okay, my fellow brother and sister crypto traders, maybe there was a level there that I missed. And I'll just throw that on there, and I will look to my left, and I will be like, let's hope that that there's a level here so that I don't have to get mad at all the fellow traders. And I would be like, I mean, maybe. But not really. Really, that level would be here. Should be 471, which would actually be above the 200. So that is a front run. The 200 EMA was a take profit target for a lot of traders, and they front ran it because instead of putting your orders, so here's what happens. You put your sell orders to get out of the trade where you're supposed to, and what happens? You don't get hit, and not only did you not get hit, if you held on to it, you lost 42%. How annoying is that? All right, back to work here. Okay, so obviously that trend is broken, and we're not concerned about this guy, and we're done with this for now. So let's clean up our junk, make it a little bit easier to see here. This we could actually... No, I'm going to get rid of that for now. We don't need that. What we need is support, if we could find any. So, let's see. The low side is really here. The actual support came in maybe a little bit more, like right there. Okay, so now that we've identified support, we can look at what we got. So is Raven exhausted? Well, it came down pretty sharp. It took a nice bounce, even lower low, took a nice bounce, failed. So that's a swing fail right here. So we can at least take a look and see if this is relevant today, you know. It's clearly relevant right here. It's perfect touch. Okay. So now we're getting somewhere. So now on our high side, we have a ceiling. Our low side, we still have a floor. We're just going to continue the floor that we already had. So I'll make that a little thicker, be easier to see. So now what we have, right, is a downward sloping broadening wedge, meaning that it's pointed down and sloping downward, right? But we have a significant floor or an area of support, and we have a significant ceiling or an area of resistance. So, can we see further downside? Yeah, we sure can. And if we do, you'd imagine that this would be a first stop level. You already got a break check down there, right? You already got one that kind of like hit the zone, ended up painting this low over here at 266. But we could certainly come down lower. Now, that being said, this grouping of candles is higher than the previous low grouping of candles. So, if we were so inclined to, we could do something like this and go by candle closes and give us an opportunity to at least ride this support level to see if it holds. Now, it's not like you wouldn't exactly use that to make buying decisions, but this would be a fairly good indication of when we broke and closed below here, right, and started trading on the flip side, that your next target area is going to be, down in this ballpark. Now, unless you have some major support, and you do really like over here, right? So you would look at that first, right? This is going to be the area where you look at, which is nice because it ends up being like just about the same as our fib level. So it's one zone to look at. This is one zone, one tier of support. This would be a second tier of support. This would be your third tier of support. But your hyper local support is right here. Until that gets shattered, obviously I wouldn't trade this, right? This would be a no trade for me. We're under the 9, we're under the 20, we're under every moving average, and there's no real magical support over here. So for me, I would just kind of let this thing ride out. Now, if it does bleed out and, start doing this, and then it gets a little retest, and then it's doing like that, then I'm thinking okay, this guy's probably going to the downstairs side of the broadening wedge. If we start getting these moves, right, and we test that 20, but then we get it back, you know what I'm saying? Well, then I'd be looking at getting the 100. From the 100, I'd be looking to test the bottom side of this resistance level. And shit, we break that, we get a nice close. Well, then we're going up. Okay? It's very possible that you get into a situation where you find a median line and it's just not drawn, right? Where this could be a median line. You know what I'm saying? So if you have you take a line here and you kind of measure it out by eye and you're okay, something like that is about the middle, give or take. And you see where that rests, inside of this pattern. And you could say to yourself, okay, well, if we trade above the median line and the median line holds it, that's kind of like your heart line in a pitchfork. You know what I mean? And then you'd be able to use that to your advantage as support resistance. Couple that with horizontal support resistance and, downward or upward slope and trend lines, and then you got something going. But yeah, for now, I wouldn't touch this for now. I would definitely want to see this thing, declare actual support. And by that, I mean, recover the 9 minimum. But if you can recover the 9 and the 20, then I'm paying attention. But if you can't do that and you're trading under both, I have no reason to believe that this is, going up next instead of continuing downward. Okay. Let's see. Vadim Fedorovsky. Vadim. Damn it. Fedorovsky. What do you think? Did I do it? Is it good? Hey, new here. All right, I'm going to call you V because we're going to keep things super easy. Ebenezer. Hello, Ebenezer from Jersey. Jersey the country or Jersey the state? Because this is a global market, so we got to you say Jersey, and I'm yo, we're brothers. But then you tell me you're from the country Jersey, and I'm well, then we're not brothers anymore. Tomo BTC. Look at this guy. Tomo BTC. Oof. Yeah. All right. Well. Okay. Let's obviously we'll have to dive into the 4-hour chart, but let's get a few levels while we're here. Oof. Okay. Yeah. All right, let's take that level first. It's a pretty good one. All right, now we had a little bit of a pattern down here, broke north, but really didn't get much out of it at the end of the day. Overall, gave us a low, and a lower low. Wow, we ended up making a lower high, higher high, higher high. So we have this weird thing happening here. It's not, this isn't exactly, what do you call it? Clear cut, let's just say. So like you're doing something kind of like that. It's a little bizarre. Yeah. Okay, so you see the like the ride here is strange, and within that ride you made this massive low. So that's what I want to figure out. This. I want to see if anything makes sense here. 1 6 1 4 1 2. It's close. Not perfect. 1 6. Huh. Okay, so here's what we got. Here's what it looks like we got. All right, so based off of this bounce, that gave us our high, even though I didn't like use the high. Based off that bounce, we pushed down lower onto a 1618 extension, right, off of that move. But that did give us this move here, so we could do like a trend-based fib where we go like down, up, and then up top. Let's see where we're at here. So just about the same, about a 1 6, which is okay. Now a 1-to-1 would have put us all the way back up here. Obviously we didn't get that. And we didn't get the 2-5. That might be a 50 or a 75. 1 second now. Hold it now. 1 second. Let's do minus, no. Let's do minus 0.75. What? No. 0 point. There you go. Better. What do we got? There it is. Okay. All right. Don't worry. We have deciphered Tomo, or at least in hindsight. That's about all we could do. All right. So, all right. At least that makes sense. That's fine. That's cool. The lower lows. All right. We're going to connect these for now, even though I kind of feel like they're irrelevant at the moment, but that's fine. So we're going to come over here. We're going to do that. We're going to do that. Okay. Now we have that. That's fine. We're going to keep this to the high side. So we're going to call it for now, like we're going to call it a broadening wedge. It is like, it's kind of not really a broadening. It's still a broadening wedge, but it's not. Is that fair? Okay, good. One thing we want to look at for sure is this pullback. Right, we got good buying over here for now, and we do have support at the 50 and the 20, although we're fighting the 20 at the moment. But I want to know what this is, right? From low to high, right? From the valley to the peak, or from the trough to the peak, what do we have over here? And if it's a 618, then I'm feeling pretty good. If it's not, then we'll keep looking around. What is this? 53.75. Okay. Good enough. Okay, so what do we got? Just about a 618. Okay, so now we can at least look at that and say, okay, at least now there's something to measure, right? There's something to sort of go off of. This is why I said, like, when we first put it on, we're going to have to take a look at a 4-hour chart because daily, there's just not a lot of history here. You know what I mean? And I don't want to be, making like key decisions off these levels, but we don't really have much of a choice, right? So I am going to get a larger fib on the whole thing. And I want to see what that high level was. The whole idea here is we want to find what was respected. And if fibs were respected, then we're going to concentrate on fibs. If moving averages were respected, then we'll concentrate on moving averages. If historical support resistance areas were respected, then we'll concentrate on those. The idea is you want to be able to understand who's trading it and how they're trading it so that you can see if there's any opportunities to trade it for us. So, that being said, with the larger overall picture, when we came back up, we did break the 2-3. We came down. We respected the 2-3 right here on a retest. We broke the 382. We came back down, but that was to structure. So we came back to structure, but not to the fib, not to the 382. Blew past the 382, found support on structure. Okay, no problem. But that structure was also the local. Geez. Okay, that works. That was the local 382 from this move right here. That's fine. That's good. Then the push up to the top side is the pocket, right? The zone in between the 5 and the 618. So really nothing great here. Unfortunately, just not like a good level. It just sort of stopped. And then the breakdown, we got support, the local 236. Let's see, we broke through the 382, found support again at the local 382, blew through our structure, got support at the local 5, and then come down to the 2-3, back to the 236 again. Okay, so this is okay. This could be a decent area to buy. Let me get this thing at least more localized here. It's not so ridiculous looking all the way out there. Okay, this is a decent area to buy, but to be honest, I wouldn't buy it until you're over the 20. Allow this thing to finish, right? If you lose the 20, then I would expect further downside, minimum come to the 618. Realistically, could be coming down to the 786, which would be confluence with the support zone right here. So this whole area, right, that whole like little support zone right there, that'd be the 786 of the local pole. So I'd be looking at that. So if we manage to recover the 20 today, then I'm okay for further upside. If we do not reclaim the 20 and the 20 ends up being resistance instead of support, then I'd be looking for the 786. All right, that's Tomo. Your thoughts on new alts like Kava? If there's no history, would you enter or wait for price history first? Or if you would enter, how? So I approach like H bar or H bear, Kava, like Matic and One when they first came out, and FET, all the IEOs and stuff. I approach those by allowing them to make their first major pivot move. All right, so like let's look at Kava. Does Kava have a tether pair? It does. Fantastic. Okay, so for something like Kava, right? You're on the daily chart. Obviously, there's not a whole lot to look at. So right away, I'm like, let me get to the 4-hour chart. I'll trade the 4-hour over most. Okay, so on the 4-hour chart, we have a listing right here. Price comes up. Okay, I'm not doing anything unless I'm on like a 30-minute chart, 15-minute chart, and I'm trying to like scalp long this. Okay, so price comes up and up and up and up and up and up and up, 257%. Right, and then it finally has a downtick. Right here. Once this candle is printed and the confirmation is along with it, then this is something that I could possibly trade. I wouldn't be like, this wouldn't be my go-to, right? Because I would be looking at things that have more history first. But if it presented itself with something reasonable, then I would certainly entertain it. All right? Once you have that printed candle, so I wouldn't start looking at this thing until that happened. I want an actual price reversal. I want a pivot, right? I want to know that when I look at the chart, there's an established floor and an established ceiling. And then anything that happens inside of that zone is inside of that zone. There's no breakout play. Nothing's happened yet, right? Even though this is like trending up, right, at the same time, it's trending down locally, okay? You're high, and you're high, right? So you got 3 lower highs at the same time you got 3 higher lows, right? So it's just one big giant symmetrical triangle at the moment. All right, so but yeah, I would approach something like new, like Kava, like that. So basically, if I start almost every chart on the weekly, right? Normally, unless I know it has very little history, then I will start on the daily. Okay, and if I pull up a daily chart and I see that, not a whole lot to go off of. All right, so then I'm on a 4-hour. And if I really want to like get, in tune with this thing, I'll roll on to the hourly and I'll see how they're pushing it on the hourly. And then I'll throw out volume and I'll see like, all right, what are they actually doing here? Who's buying where? Why are they buying it there? And then if I really want to like get in and scalp this thing, I'll scalp anywhere between like a 1, a 5, and a 15 to get an idea of like how this thing moves, right? How it lives, how it breathes inside of the bigger moves, inside of the daily, what is it actually doing? Something like that. Can we look at BAT BTC? Yeah, sure can. You want to look at BAT BTC on a 15-minute chart? Because we got a nice reversal. No? Oh, what? Okay. BAT. The tweezer top that destroyed BAT happened right there. All right, so what were we looking at here? We were looking at resistance, pullback, buy it, and I guess that's our target? Is that what we're looking at? No. I remember looking at this. Yeah, we want to break this level first, right? That's our big thing. So this would be the zone, right? But I don't want that zone until we're on the other side of this trend. Now again, like I said earlier today, right? This is not a trend yet. This is just an idea. All right? But that being said, I'm willing to not risk anything on this particular trade until we're through it. I want to be on the other side of it. When we're on the other side of it, I feel okay, right? But we need to at least break this first, and we should break it on this level, right? So if we break it on that level, then it's good. So maybe one more day side, push up, break, come back, retest, and then push up. All right, so nothing's really changing on BAT. I'm okay with it sitting right here sideways. It's showing rejection at the moment. But this would be a no trade at the moment. Just a no trade zone at the moment, just until it clarifies that it wants to do something. This can go low, right? Our next buy area would be all the way down here. All right. This can go lower if it just simply cannot muster the momentum to push past this. If we push past it, then it's fine. You break down here and you don't have a whole lot in between you and this thing coming all the way down. All right. Let's see. Were you humming Suzanne Vega? Was I? I don't know. How does it go? I don't know Suzanne Vega by name. Also, please check ZRX. It's a signal. Okay. Nice. He throws in there that little, like, hey, buddy, just to let you know. Now I know, it's going to be ZRX BTC, right? I know it's going to be on the Binance chart, right? Just makes life so much easier. Appreciate that. Okay, so 0x or 0x or 0x or ZRX. So many different ways to say it. Okay, so we did break out of our little zone over here, so that's awfully good to see. Let's see, what does the signal say here? Let's see, 3412 was a target. 3412 was down here. That was the first take profit, so clearly that candle over here hit it. So that's good. And then the next one is 3560. 3569. So like right on the top side of this green zone. Okay, so where price currently is, price came far down after the big drop, came down, consolidated back in its accumulation zone from earlier, this little consolidation period, came over here. It got a lot of little low guys down here, but nothing too dramatic. Tested the 100 once, tested a 50 once. We do have a golden cross, 50 over 200 right here. Not that that's going to give us any short-term targets, but it doesn't hurt. It doesn't hurt to have that on your side. The breakout play right here from range is great. The retest is good. And then, all right, so the push-up, I don't know why this is green. This needs to be red. The push-up to, here we go. So the push-up to resistance, the first initial push, was rejected right here. That's also your 200 EMA, so your 200 DEMA sitting right here. The 20 knocked you down yesterday. The 20 also knocked us down today. So again, just like I said with Raven, you want to take over the 20 on the local side. This one's a little better because you got the 9, the 21, the 50 to 200, the 100 DEMA, and the 100 DMA are all on your side, right? They're all support. The only thing holding you back now locally is the 20 DMA and the 200 DEMA. All right, so if we can get through those two guys, it's kind of like open waters for a little while. So we should be looking pretty good. Just allow this to play out. The problem with the market today is the bigger move on Bitcoin. Bitcoin's been sideways in that range for 11, 12, 13 something days. And now today, all of a sudden, right, you have a decent move. Once you have a decent move, it's like, oh boy, everyone's got to like hold on. But we could be looking at something pretty good. Bitcoin dominance right here. So this flip that I was talking about earlier, talked about this last week, talked about this, not last week, earlier this week, last night and this morning in the update. But that flip right here, right? Bang, bang, bang. And now we have a flip. All right. So we held it here as support, only just barely. Got a huge rally up once we nailed it. Came down. We got our support level. Push up. Weak rally, right? Failed to get back into range. Dropped back down 4 days in a row to the bottom of support. Broke support. Got back into range. But at the same time, you flipped, right, that long-term support level to resistance. So that could be a big deal. And I will say if dominance is going to prove this SR flip true, that dominance level is going to be coming way down, like alt season down. Okay? Unfortunately, what that probably means is that Bitcoin price is going to go down with it. Okay? Not guaranteed, but highly likely. Highly likely. And if that is the case, then you'll see, or we should see, alts paired to Bitcoin really crushing it. Like really crushing it. Not so much the USD pairs, because obviously the main value is decreasing, but the performance against Bitcoin, because Bitcoin would be like nosediving, essentially everything would look good. So maintaining the same Satoshi value, dollar for dollar, clearly on the chart, it would look like, the alts are ripping it. Something to think about. We're not there yet. Hasn't quite happened. Today could be a precursor. With the first, big look outside of that range, and, again, losing the 200 brings us back into this zone over here, right? We lost the 200, and then we just went sideways with, the overall slump feeling, right? It was just an ugly sort of few weeks. Where over here, this could be the precursor of yet the next ugly few weeks in which we range down and we do something super awful that would make a lot of people very mad if it was like that. Right? And you got the slow bleed, right? That takes you all the way into next year, and all you do is double bottom. Right? On a zone that we were just at 2 weeks ago. That would be kind of bad. That would be really bad. What would be super, it would hurt at the time, but would be really beneficial for a lot of people is just hit that 350 and call it a day. Find a target level that you're trying to hit and get there and do it quickly. But we don't have that luxury. We don't. We have to watch this and sort of see, where is it going to settle out? What is it actually going to do? I'm on the fence on whether this is done or not. I don't think so. I really don't. It's a decent buyback, but we're going into Saturday. We're going into Sunday. Weekend trading is on top of that, right, you just have the overall, now we're below the 200 again. If we close, if we remain here for the next 4 hours and we close below the 200, well, then it looks like this whole thing just ends up becoming a big false break. I mean, there's just so many different ways you can interpret that one candle that, it's not great for everybody. I want to see this touch. I want to see the retest. And I do believe the retest, on the grand scheme of things, I do believe that retest would be good. All right? This overall pattern, the breakdown, the falling wedge, the whole nine, the one breakout play, come back for the elongated retest, and then a push up. I mean, I think we'll fail up here. I would short all of this, but, I think that'd be good. I think that would be good. It's an easy trade because the second it's not good means it's below it's below the swing fail, and at which point I'd be looking down here. I'd be looking in the 7K range, just because it makes sense, right? It's the next major level outside of the weekly. All right, France. Mark says evening. Mark Hicks says cool. Thanks. All right, very good. All right, we're going to wrap that up right there. A little recap on Bitcoin. So I hope you guys got something out of it. I hope your questions were answered. Thank you for joining me. I do appreciate it. So a little Friday, a little earlier, across the pond type deal. Always good seeing some new faces in the crowd. Until then, I'll be on the Discord floating around, and, I'm always around. So I'll catch you guys on the morning update in the Discord. Want to see you guys on the exchange. And until then, happy trading.